On March 4, 2025, the United States entered a new chapter in its trade relationships with Canada, Mexico, and China. President Trump announced the implementation of significant tariffs on goods imported from these nations. The tariffs, a cornerstone of President Trump's economic policy, are aimed at protecting American jobs and industries. The administration argues that these tariffs are necessary to address unfair trade practices and reduce the trade deficit. The tariffs target a wide range of goods imported from these key trading partners. For Canada and Mexico, a 25% tariff has been imposed on a variety of goods. This move comes as a surprise to many, as both countries are part of the North American Free Trade Agreement with the United States. The Trump administration has repeatedly criticized NAFTA, calling it the worst trade deal ever made. China, already embroiled in a trade dispute with the United States, faces an additional 10% tariff on top of existing levies. The tariffs on Chinese goods are largely in response to what the Trump administration deems as unfair trade practices, including intellectual property theft and forced technology transfer. The ongoing trade war between the two economic giants has created uncertainty in the global market. These tariffs represent a significant escalation in trade tensions between the United States and its major trading partners. The decision to impose tariffs has drawn criticism from American businesses and farmers who rely on these markets. The coming weeks and months will reveal the full impact of these tariffs on the global economy. The response from Canada, Mexico, and China to the Trump administration's tariffs was swift and decisive. Each country announced retaliatory measures, targeting specific American products and industries. These retaliatory tariffs are designed to inflict economic pain on American businesses and pressure the Trump administration to reconsider its protectionist policies. Canada's Prime Minister Justin Trudeau expressed his disappointment with the tariffs, calling them unacceptable and harmful to the strong economic relationship between the two countries. In retaliation, Canada announced plans to impose 25% tariffs on approximately $100 billion worth of U.S. imports. Canadian officials stated that the tariffs would remain in place until the United States removed its tariffs on Canadian steel and aluminum. Mexico's President Andrés Manuel López Obrador also condemned the tariffs, calling them unjustified and harmful to the Mexican economy. While details of Mexico's retaliatory measures are expected to be announced soon, Mexican officials have indicated that they will target American agricultural products and steel. The tariffs could have a significant impact on American farmers, particularly in states that heavily rely on exports to Mexico. China, already engaged in a tit-for-tat trade war with the United States, responded with immediate retaliatory tariffs on a range of American goods, including agricultural products, automobiles, and chemicals. Chinese officials also hinted at the possibility of non-tariff barriers, such as increased inspections and delays for American goods entering the Chinese market. The announcement of new tariffs and the subsequent retaliatory measures sent shockwaves through the global financial markets. Investors, already wary of escalating trade tensions, reacted with a mixture of fear and uncertainty. The initial response was a sharp decline in stock prices across major indices, reflecting the growing concern over the potential economic fallout from a full-blown trade war. The Dow Jones Industrial Average, a key indicator of the health of the American stock market, experienced a significant drop in the immediate aftermath of the tariff news. The tech-heavy Nasdaq Composite also tumbled as investors shed their holdings in major technology companies that rely heavily on global trade. The volatility in the stock market reflects the deep uncertainty surrounding the potential impact of the tariffs on corporate profits and economic growth. Gold, often seen as a safe haven asset during times of economic uncertainty, rallied in response to the escalating trade war. Investors, seeking refuge from the volatility in the stock market, flocked to gold, driving its price higher. The rise in gold prices is a clear indication of the growing fear and anxiety among investors about the potential for a protracted trade war between the United States and its major trading partners. While the immediate impact of the tariffs is felt in the financial markets, the long-term consequences are likely to be borne by consumers in the form of higher prices for everyday goods. The tariffs, essentially a tax on imported goods, are expected to increase the cost of production for businesses that rely on imported raw materials and components. These increased costs are likely to be passed on to consumers, leading to higher prices for a wide range of products. The automotive industry, heavily reliant on global supply chains, is expected to be hit particularly hard by the tariffs. Cars and trucks assembled in the United States often contain parts and components sourced from Mexico, Canada, and China. The tariffs on these imported parts will inevitably lead to higher production costs for automakers, which will likely translate into higher prices for consumers looking to purchase new vehicles. The agricultural sector is another area where consumers are likely to feel the pinch of higher prices. China's retaliatory tariffs on American agricultural products, including soybeans, pork, and corn, could significantly impact American farmers who rely on exports to the Chinese market. The reduced demand for American agricultural products could lead to lower prices for farmers and higher prices for consumers at the grocery store. The tariffs imposed by the Trump administration and the subsequent retaliatory measures taken by Canada, Mexico, and China have created a climate of uncertainty in the global economy. The potential for a protracted trade war looms large, threatening to disrupt global supply chains, increase prices for consumers, and stifle economic growth. The coming months will be crucial in determining the long-term impact of these tariffs and whether they will achieve their intended goals or lead to unintended consequences for the American economy and consumers.